Hey trader, how you doing? Todd here with tradinganalysis.com. This is going to be your video update for Thursday, the 18th already. And last video, free video we did, we were looking to be short some tech names. We realized that was the incorrect trade. We covered them and we went the other way. We got into the long side, so it's good. We've been okay on the long side here. We've got quite a few longs here with our research customers here. SPY. We have Home Depot. There's another SPY there, Facebook. So we're pretty well loaded on the long side here. And actually, we made some fun moves that I want to talk to you about here, which is we actually sold some upside call credit spreads. We have a lot of put credit spreads below, and we initiated that one. When did we do that put credit spread? So we did that one on February 8th. Okay, so February 8th was like back here. We went down in an ending diagonal. This is a great fifth wave pattern. And what happened is this ending diagonals come ripping back. And this is really what you expect to see in a fifth wave ending diagonal. Now, what's interesting is this has been such like a one-way freight train. We did break through the 786 price retracement here, which is pretty remarkable without any kind of meaningful pullback. So we have some profits with that, with the 184, 182 put spread we did there. And we just actually sold some March 194, 199 call credit spreads. So over here in the SPY, you can look at the left scale. We sold the 194, 199, which you're gonna see matches up with the 1272 extension of the wave 5 drop down here. So 786. I'm a little surprised we poked through without any kind of pullback. I have a feeling a pullback is coming. If I'm wrong, we could move up to the 1272, but then I firmly believe we're going to get a pullback, and that 194, 199 call credit spread should be okay. All right, so that's what we're doing in the SPY. We also did this in Home Depot, so let me bring that one over. This one was interesting. We did on the 16th, we did a 117, 115 put credit spread, which is a bullish trade. And then just today we added on a 125, 127 call credit spread, which becomes an iron condor, okay? If you have a put credit spread and a call credit spread, equidistant in terms of strike spread, that becomes an iron condor. So here's what's interesting on Home Depot. We're up almost to the 1.618 projection of wave 1. So take wave 1 distance, if that was, call it 10 bucks, a $16.80 rally will become your wave 3 target. We should be settling into a wave 4 consolidation for a period of time, then go up in wave 5. Okay, so I think we should have a little bit more upside to go, but with these options that we did in the Feb 4 weeklies, you know, these have another 2 weeks to go. So we should be able to kind of chop around in here once we finally top out in 3, chop around in 4, and then maybe make a new high up there in wave 5. That should allow us to collect premium as volatility kind of drops away there in the 4th wave. So that's Home Depot. We did cover up our gold trade. We talked about that one. We had a callback ratio on the gold market, which is really good for an ending diagonal. So I think we talked about that one. And then the other one, let's go back to Amazon and we'll finish it up there. Amazon's at a pretty interesting point here in terms of an Elliott Wave count. We've rallied back pretty sharply here in Amazon, and you'll see that we are right at the wave 1 low. Okay, so that's going to be a pretty good line in the sand there for Amazon. So the low was 566. In a good 5-wave move, the 4th wave should not enter the territory of wave 2. Motive Wave is giving me a hard time there because I've placed it. So that's going to be an interesting level to see as well. The other thing, I'm just throwing a bunch at you here. These are a lot of things we talked about with our members here. Gold and bonds have both pulled back into kind of similar support levels like the Amazon market did, but upside down. So there's wave 4 support down here in the bond market, anywhere from 164 to 162. We should not go below the high here, which is right around 161.5. Okay, so bonds are into support, and also gold is into support. Now I'm looking at this as a potential pullback. It's like the same setup as the bond market. Okay, so gold's in a nice way for a pullback, and also you have the old high from October 17th broken, now serves as support on top of your wave forward support. So, we've got gold bonds at support. We've got the S&P really overcooked to the upside, so we laid out some call credit spreads up there, taking some premium. If anything, we go sideways, maybe we reverse a little bit, but it's been a pretty good move. Little sharp for me that kind of signals short covering in a bear market rally. All right, guys, hope this video helps. Go ahead and hit the like button if you're watching on YouTube. Leave a question, comment, anything below, and I'll get right back to you. And good luck trading, and we'll see you next time.